Welcome everyone to a special edition of Story Trading. We got Aaron Warwick back with us with a new pick. As you may know, he is one of our best contributors and stock pickers. You can track his performance over on our website. But first, a quick disclaimer: Story Trading is not an investment advisor. Investing in securities involves significant risk of loss, and that goes for Aaron Warwick as well. And our guests, not investment advisors. We are recording this presentation. The full recording will be available for our VIP members. Parts of it will be published on YouTube about 7 days after it's made available to our VIP community. So with that, before I pass it over to Aaron, again, I just want to remind people you can go to, here it is, storytrading.com, click on performance, and you'll see his outstanding performance. I think is at 8 picks, each one up an average of about 45% each. So you best pay attention. Here we go, Aaron.
I shouldn't have closed out Numera at $9
Oh.
or whatever it was. It's closed at like 12 something today.
Yeah, congratulations on that.
Well, that's just, I wasn't, but I think it's traders in it right now. But anyway, no, thanks for having me on again. And I do have to say on this pick that I present today, I came across it with a colleague of mine, Scott Shuda, presented it to me, and I did some more research on it. Some other people have been researching it, and I'm interested to hear what Ben's skeptic take is on it, because other than the things that I present, I'm not really like, I'm having a hard time finding it. But at the same time, I want to start it this way. If something sounds too good to be true, it probably is, right? And that was my first thought when I heard this, and I started like asking questions. And it's like everything seems to check out. And I think, so either I'm missing something, maybe Ben will point it out, but, or it just could be that the market is not fully aware of what's going on here. So with that in mind, what I'm looking at is a trade that, if my calculations are correct, I think it'll do between anywhere between 40% and 67% return between now and likely mid-June. And the reason I say mid-June is you'll see it's kind of like a binary. It's almost like a binary event. So what in the world am I talking about? There's a really small company called Crossroads, CRSS. And they are a holding company for a bank that's called Capital Plus Financial, who's based out of Dallas, Texas. And this bank is what's called, they're a certified CDFI, Community Development Financial Institution. And they help support Hispanic people in the Dallas area obtain home ownership with a long-term fixed rate single family mortgage product. And this bank was acquired by Crossroads in late 2017. So as of March 31st of this year, Crossroads was valued at $58.5 million. And the reason I bring up the date of March 31st is because things changed in April. So in April, the Federal Small Business Administration, SBA, released its report, which they do, I think, every week, but the first one of April, about the Paycheck Protection Program. And that was the first time in any of their reports that Capital Plus Financial appeared as one of the top 10 lenders of that program. They're number 6 lender for the Paycheck Protection Program, the second round of it, which was geared more towards small business owners, Uber drivers and, things like that. Because so many of those people were overlooked earlier. Okay, and so after that report came out, between April 4th, when that report came out, and now, I think the highest the stock has reached is $58.30 a share. And that is from that 58.5 million market cap I mentioned, was like sub $10 a share. So 9 something.
Oh, wow.
That it closed. Yeah. So the stock has already moved a lot, right? My average price is actually probably about today's close. So I've been buying it. I didn't buy any up in the 50 high 50s, but I did buy more as it's dropped back down to this level, and I'll explain why. Okay, so the gist of it is this. The SBA releases their report every week. The last report, the one that was issued actually on Monday or Tuesday this week, has Capital Plus Financial as the number 4 lender in their program. Let me see where these numbers. So Capital Plus Financial has given out over 380,000 loans, $6.6 billion in total loan value, averaging out to just over $17,000 per loan. Now, if you go look at the SBA released what they call a procedural notice. It was earlier this year, and it's February 8th. And it details how the fees that they will pay to lenders for this program. So for the first category are loans under $50,000. So those are obviously the ones that Capital Plus is doing the most of. So they will pay either they pay the lesser of 50% of the loan, or $2,500 per loan. So at $17,000 a loan, I think it's a pretty safe assumption to say that, that they'll get $2,500 per loan. There's the possibility, that they have a few loans that are under $5,000, which would then, amount to them getting a little bit less than the $2,500. But with a $17,000 amount, I don't think it's likely that very many are that way.
Whoa, sorry. I'm sure everyone else did the same thing I just did. Took out a calculator.
Yeah, right.
Is this real? Go ahead.
Mm-hmm.
Yeah.
So the quick math is that $950 million that we're talking about that they're going to be paid. But, based on that calculation, it's important to note that Capital Plus will not keep all of the $950 million themselves, but they'll split it in some fashion with their lender service provider, which is called Blue Acorn. So what Blue Acorn does is they compile loan application paperwork for the program, and they help the borrowers apply for and secure the loan. Based on some research that I and others have done, including speaking with investor relations, which is Gateway for
it's
Crossroads.
Gateway. Great.
Yeah.
Okay. We have a relationship with them. Mm-hmm.
Good. So they have indicated we don't see any way that the Blue Acorn would get more than 70%, and we think it's highly unlikely they're going to even get that much. But that was just a number that was thrown out. We think that it'll land somewhere between 40 to 50% based upon what we're seeing with other banks. There's some public info on that. So I ran different models. Before I do that, I guess let me just talk about some risks. I mean, the number one risk would be if, for some reason Blue Acorn has some better deal with Capital Plus than any other bank seems to have had with their lender service provider. So, but even then, you can see when we get to the valuation, you'll see that even then there's probably 10 to 15% upside, even at that low number. And that's just the lowest number. The reason I bring it up is the lowest number I've ever heard anyone even talk about as within the realm of possibility. But I give that very, very improbable that it would be that low. There's also a Twitter thread that a guy wrote about this, and that he claims that Crossroads management said to him, whether you use a 30% cut or a 50% cut, the number is colossal relative to our typical annual earnings. This guy estimates, this Twitter guy thinks, he's using 40% as a number with 50-50 possible. In our own discussions with Gateway, it sounds like it's probably going to be closer to an even split, whether you're talking 40-60, 45-55, 50-50. There is one person I know who thinks that the Blue Acorn will get less than 50% of it, but he's in the minority. Anyway, another risk then is, what does management decide to do with this money? And also, like, some people are in this stock, it's very illiquid. So what happens with everyone wants to exit? Well, that's a reasonable question. Again, in speaking with Gateway, it sounds like, they're probably going to do a one-time special dividend. So whatever they decide that amount to be will likely put a floor in the stock. There was, they have been talking for a while, Crossroads has, about acquiring another bank called Rice Bank Shares. And it would be a similar thing to Capital Plus. Quite frankly, that would be a very good move, but it's only $32 million we're talking about. So in the grand scheme, it's not even like 10% of what they'll get. So I'm not too worried about that. And honestly, in the grand scheme, it might make them an even better investment, because this Rice Bank Shares and the stuff they do would be like a big fan of progressives and a big fan of the way the government seems to be going right now with banks. So I'm not too worried about that. And again, only $32 million. And then the other risk to point out, besides the illiquidity, is there is the risk that some of these loans could be what they call clawed back, that meaning that they could, there could be some sort of audit on them and say, well, these weren't really, this guy drove Uber one time and before the pandemic, and, but there are so many of these loans out there, and it just, I don't think there's anyone has the political capital to do that. We knew in the first round of PPP, there were people that took advantage of it. It's just part of the game, to get that kind of money out to help people out. You're going to have some people that cheat the system, but we never saw a massive clawback from that. I don't think we're going to see one for this, especially because this round was especially meant for the little guy, average $17,000 in a loan. That I know small businesses, the first round, that got significantly more than that. So I don't think that's a huge issue either. So anyway, getting to the valuation, a couple things that I factored in. So I just did, I'll tell you the numbers on, and I'll post these later if that's okay, Ben, in one of the rooms. So I did a 40, 45, and 50% split, meaning that they would keep 40, 45, or 50%. In all of these things, I have a couple of in all of these calculations, I have a couple of assumptions. Number one, in addition to what they're getting this time for the loans, I add back $58.5 million for their previous market cap, because they still have their underlying business that was valued at that pretty consistently. It wasn't that volatile for quite a while. The second thing is, we've got to factor in $103 million of net operating loss carry forwards. So for tax purposes. So we factor that out for taxes. They don't have to pay tax on that. For the tax rate, there's a 21% corporate tax plus 0.75% franchise tax on margin in Texas. And then the total number of shares outstanding is just under 6 million. And then the one thing, I think one of the critiques, kind of kicking it around with a few people, and even my first response was, well, it's just a one-time deal. You think about companies like when they have some windfall with revenue or whatever, you don't want to factor that in, but with this, it's just straight up cash, right? So this is not just revenue. We're talking about cash that they receive from the federal government, from the SBA. So, we don't have to worry about that. So I just assume that as part of the cash that they get will become part of the market cap. Most likely, again, they'll do some sort of special dividend to get that money out. By the way, majority of the company is held by the insiders. So they want to do, they're going to be shareholder friendly because they own over 50% of the company. I think almost 2/3, according to one of the filings I saw. So anyway, let me get down here. So if you take that $950 million, actually, I think I need to. Actually, okay. So sorry, I got to update my numbers in that document I was using. Going to Excel now. So they're actually at $966.9 million now. They had a few extra loans that came through on that report this week. So it's actually up to $966.9 million. You factor in, their portion of it, the net operating loss carry forwards, take out the taxes, add back in the March 31st market cap. The price per share, if you do 40% split, would come out to $64.25, 40% return from today's close. If you do 45%, you're talking about $70.50, 54% return from today's close. And if it's a 50-50 split, you're talking just under $77 a share, 67% implied return from the share price at close today. So what was that one other thing I was going to say? I thought of that something else when I was going through there, and now it slipped my mind again. So anyway, that's what my evaluation on them is. There is the possibility they could actually make a decent chunk of money on servicing any of these loans, but I'm not factoring that in because most likely the vast majority of them, 95% plus or more, will be forgiven quickly, and so they won't earn any of the interest over the lifetime of the loan. I think that will be all I have, and I'm happy to take questions.
All right. Thank you, Aaron. Interesting kind of special situation stock. Yeah.
I remember what I was going to say. So last year they reported Q2 results in mid-June. They're not a calendar year, fiscal year. So that's why I say mid-June. And they've sort of signaled that through IR that, we should expect something in mid-June.
Okay. All right, great. So I did not research this stock ahead of time, so I'm going to do my best job at being the skeptic as I can here. Always going to be very hard when you already vetted the stock, Aaron. So, but the first thing that comes to my mind is, how did they go from a nobody, Capital Plus Financial, to being a top 10 provider of PPP loans? Not only top 10, but now in the top 4.
Right.
How did that happen? Like, I don't want to imply anything bad right now, but I want to verify that. How did that happen? Did he look into that?
Yeah, because they serve the Hispanic community in Texas, and so the Hispanic community has a lot of people that were impacted by COVID. In some of these small business jobs. I mean, whether you're a painter or Uber driver, or you own a little small lawn service or whatever, any of these types of businesses could apply for these types of and the requirements were to apply for it and to get the loan are much less strict than they were the first time around, because the complaint with the first one, that one of the main complaints was, you helped all these big companies, but what about these little guys that were hurt? And so they were already well known in that community. And then I think this Blue Acorn that they partnered with, made a big effort to get out there and to get some of these loans. So that's my understanding of it. In terms of that they actually made these number of loans, the reports come completely from the SBA, the federal SBA. And I can provide links to that too, if we have to set up a room or just in the VIP investing room or whatever you want.
Right.
Links for all of this.
Yeah, it's always very good, even though it came from the SBA, to do your homework there. I'm glad you did that. But you kind of went where I'm going with it is Blue Acorn. So what I want to touch on is you talked about the possibility of clawbacks and Blue Acorn, because this is what comes to mind. If a nobody goes to top 4, might that be because they are a nobody and Blue Acorn was the everybody? So in which case they would get like a 70% cut, number one. Or might it be that it could have more scrutiny here from the SBA saying, how did this nobody get top 4? Why are we paying them $1 billion? Maybe let's scrutinize this. Now I understand they're all small loans and there's no risk in terms of auditing, on that level, the clawbacks. But what if there was something systematic here that they were able to issue all of these loans to the Hispanic community? Was there any kind of wrongdoing there or something that allowed them to jump to the special position? So that just some things to think about. I'm not saying there is. I have no idea if there is. Most likely there isn't. I'm just giving the skeptic.
No, I mean that's definitely a risk, and it's worth pointing out. I know some people that I know someone who knows someone that is an executive at Crossroads. They've been involved in lots of different businesses. They're legit business people. They have an overall plan, including this acquisition, that I mentioned about what they're doing with their banking side of the business. So I don't think they have any interest in running a scam. I think they're legit business people, and they just happen. And by the way, what they've been targeting is banks where they would have significant government backing. So, I don't think that they planned on this type of thing happening right away, but they had sort of set themselves up to be in that type of environment. Again, I don't think they predicted this, but they positioned themselves well. And there are also, there are some other banks up there, if you look them up. So, I mean, a lot of them are private. One of them is public. They made a disclosure already about how much they were going to get, and it aligns with what we're thinking on Crossroads. So.
Okay, great. And, it is, of course, no one intends on running a scam, but it is tempting,
Right.
$1 billion special situation. You never know. It's a potential risk.
Right. And I think Blue Acorn, I mean, you do make a good point there. I mean, there are some that make an argument that perhaps Blue Acorn has done more for Crossroads than lender service provider would normally do. So maybe they will get a little bit bigger cut. But, seeing that it tends to be around the 50-50 split, it's hard to imagine that they would get that much more, because in the end, Blue Acorn also needs a bank. They're not a bank. So.
Yep. Great. And let me try this angle. All right. Can you see my screen? So here's the chart, and you can see where the stock really inflated from this April 14th, I would say, to April 21st is when most of the volume and the price inflation happened. So obviously these were people who were closer to the story. And I guess this comes from my kind of market efficiency perspective, right? If it skyrocketed up to here and now we're stable, could it be priced in? Could these people who are no longer buying up here, or they're maybe selling at these levels, could they maybe have some insight into how that revenue is going to be split or whatever, and they think the fair value is around 46? So essentially, could it already be priced in, and we kind of missed most of the price appreciation over here?
Well, we obviously missed most of it.
Yeah.
I mean, from 10, it's already up 400% or whatever.
Yeah, that's true.
But yeah, I mean, I think that, I think part of it is everybody has their limits on how much of this they're going to buy. I mean, I know someone who has a lot of money in it. I certainly wouldn't advise that. I should note also that I have it, more as a speculative pick. I wouldn't recommend, go putting 10% of your portfolio in this pick right now. I think the big question that, I think the biggest thing is it sounds too good to be true for a lot of people. And so that's part of the deal. And so I think that's helped me, including myself, why it's held me back. Maybe there's something I'm missing, but the more I look into it, the more I hear about other banks that have been doing this. I mean, it seems like it really is true.
All right. Thank you, Aaron. I did my best job as I could there as a skeptic, just learning about all this for the first time here. So let's open up to questions. There's some in chat. You can raise your hand if you want to come on audio. In the meantime, I'll read these out. Let's see. Mark Gomes. If there's a special, I don't know. I don't understand the question too much, but if there's a special dividend, what's the valuation implications? He says you can see his question there. I think he sent it to everyone.
Yeah, I mean, I would think, to me, I mean, a special dividend should put a floor in the stock for until after the dividend. I mean, like, let's say if they come out and they say, they're going to give a $30 per share special dividend, well, then, I mean, share price shouldn't drop below, $30 a share, right? Till after they give that dividend. And then by the time they've done that, then if you're a shareholder, then you get that cash, and then the stock price should react after that, would be my assumption.
Mm-hmm.
So, there could be, I mean, here's the other thing. Here's one of the risks that I would bring up, like as it relates to the low liquidity. And I kind of touched on it earlier, which is, if everybody heads for the exit. Now, what I'm understanding is, from what we've heard, is that they're going to probably, whenever they announce this, they're probably going to also announce what they're going to do with the money, how they're going to distribute it to shareholders, or, whatever they're going to, or just keep it. I mean, the thought is they're going to distribute a good portion of it. Again, keeping in mind that the insiders are the majority owners of the company. So they have a lot of incentive to do that, to return a lot of it back. The other side of that we've seen many times in some of our names in these over-the-counter, I think the other day I bought a few extra shares. I think it had traded like 148 shares or something like that when I went in the afternoon. They just go to crazy. You get traders in and people that don't know what they're talking about. Maybe they'll be making more and more money will come, whatever. And they can drive it to insane levels too. So that, that can go both ways. But again, that's why I'm keeping it as a speculative pick.
Okay, great. Mark, I see you have your hand raised, but let's just go through the chats first and I'll come to you. Okay, so we had the question on liquidity over here that you just covered. Maybe we'll call on Florian. I'm not sure his question there. But he says the business is also super lucrative. They get more than 10% on the business they write.
Yeah, so he's talking about the mortgages.
Okay.
So yeah, the mortgages that they write are usually like higher interest, and so they are they make good money on that, and they have actually good what do you call it? I can't think of the right term, but a high number of people that actually are up to date on loans.
Can you clarify? You mentioned that Blue Acorn needs a bank. They're Capital Plus Financial. There's some confusion in the chat whether they are a bank or not. What's their status exactly?
Well, they're actually what that is called a certified community development financial institution, so a CDFI. And they're a certified B Corp that supports again Hispanic home ownership. So
they give loans out, but there's no deposits. It's not like a retail bank where people will have a checking account or something like that.
I think that's correct.
Okay, great. Cool. Thank you for that clarification. Wow, lots of comments. All right, so now let's go to Mark Gomes. Go ahead, Mark.
Hey, so I just looked this up. Depending on how the dividend, if they do a special dividend, depending on how it's treated, because special dividends get treated as a mixture of capital gains, ordinary income, and returns of capital. Depending on the exact treatment of that, the dividend would be taxed at roughly 20%, whereas capital gains are taxed as ordinary income. So if you think about it, if you buy the stock, let's say at 50, and they announce a $30 special dividend, you're only going to pay 20% on that $30, but then you are going to take a capital loss of $30, which will offset taxes that you're paying at 40%. So what happens as a result, and I've been involved with these before, I just have to refresh my memory because it's been a while. When a company announces a special dividend that gets treated that way, the stock actually goes even higher because of the tax benefit that you get from only paying 20% versus 40%.
Cool. Thank you for that
Yep.
clarification. What's the implication of that on valuation that you're looking at? Mark, go ahead. I have to unmute you again. Let me change the settings.
Yeah, no, I muted myself again. Yeah, well, so it all depends on which scenario plays out. And Aaron brought the idea to our attention with the math and all that. So it's a simple equation though. So in the example I gave, the stock's at 50 and they announce a $30 special dividend, then you're going to not pay 40% on $30, because of the offset. And that assumes that you have, capital gains this year to offset against that. But you will pay 20% on the dividend itself. So the net effect is that you are, you end up netting 20% on that $30. So if in that scenario, whatever the special dividend is, take 20% of that and tack it onto the valuation that you assumed. So if you thought 50 is fair value and you bought it at 50 and they announce a special dividend, well, now you add $6 to that because it's a $30 special dividend, taxed at a 20%, benefit, net benefit. Understand?
Sure. I'm going to take your word for it. Thank you, Mark.
Hey, I'm just posting right now the valuation. So if anyone in the VIP investing room, so if anybody wants to download that and play around with it, you can see, or just look at my assumptions. And any other questions?
Okay. Yeah. Cool. We might get management. I already got a response during this call. I contacted Gateway. So we may well get management to present a quick response from them. So yeah, any other questions? All right. So with that, let me just share my screen. If you guys want to hang on, a couple housekeeping notes, and we are going to keep the lines open for happy hour as well. So just give me 1 second here. So, yep, we are opening a CRSS research group. So look out for that link in the VIP investing group just to keep the chats organized. Again, you can go to StoryTrading.com to check events. We do happy hours every Wednesday and also Sunday nights we get together. And you can follow us on YouTube and Twitter at StoryTrading. So thank you very much, VIP members. You can hold on and we'll keep our lines open for happy hour. Take care.